Good evening, everyone. It's a pleasure to have you all in today's study circle. IPO. It's not as alien a topic as it used to be a few years back, isn't it? Uh, how many of you invest in IPOs? किसी में इन्वेस्ट करो ना करो आईपीओ में तो करना ही चाहिए हर आईपीओ में, राइट? So again, welcoming all to a topic that is making headlines, shaping markets, and maybe even controlling economy's temperature, right? So IPO have always been a fascinating subject. Whether someone understands it technically or not, whether somebody has been involved in its ecosystem or not, but everyone likes to get some news about it. Pun intended. They represent a company's transition from being a private company to being part of a public domain. This journey is not just about numbers or raising funds. It's about vision, ambition, and a lot of accountability. So let's talk about some facts that highlights, IPO's journey in India. So, year 21 to 23, 3 years, it has witnessed a total of 160 IPOs in India and raising close to a whopping 230,000 crore rupees from the market. And 2023 has been a milestone year for Indian capital, or rather, IPO market. Let's see. Test your facts and, general knowledge about IPO. So we have a little quiz here. Do you all have your phones with you? Okay, open your phone and open the scanner.
Google scan.
We have a QR code. 1 second. You all can scan this and there's a quiz, 6-7 questions. Okay, so last question. Which company has a pure play digital business model? No traditional physical assets involved. Surprises. So how many of you got all 7 right? Anybody? 6? Okay, good. Highest score is 6. 2 participants, yeah. So we had total 78 participants. You all got right answers also after each question, right? Okay.
Yeah.
Okay. So, I think it was one of the questions. Can anyone tell me, guess Indian companies managed to raise what amount in 2023 through IPOs? 1 lakh, yeah. So, Indian companies raised over 1 lakh crore through IPOs, making it one of the most active years for public offerings globally. So, 2023 was one of the most successful years in terms of IPO in India. It also marked a milestone for India with the inaugural listing of a non-profit on social stock exchange. So though the notification was there since a while, but 2023, there was first listing on SSES, we call it. A lot is spoken about the thrill of IPO. One standout example about the thrill is the largest IPO that we had some time back, which is LIC IPO, raised around 20,000 crore, making it the largest IPO in Indian history. But IPOs aren't just about numbers, it's about stories. For instance, consider Zomato's IPO in 2021. It was kind of defining moment for Indian startup ecosystem. It was one of the first startup, tech startup that got listed. And it showcased how young tech-driven companies can leverage public markets to grow and innovate. And Zomato IPO also opened doors for, similar startups like Nykaa Zomato or Paytm, which followed the suit after that. So Zomato was one of the first ones in the startup ecosystem to, take the big lead. We often think that companies go public simply to raise capital, but the reality is much more layered. There are various reasons for companies to go public. For companies, going public means accessing large scale, funding for growth, but also for repaying debts or for giving exit to, the early investors. Do you know when Infosys launched its IPO in 1993? It raised only 95 crores. And today, it is one of the most respected IT giants globally, which is valued at probably billions now. So that's the power that IPO has given to, companies, specifically in India, if we talk about, companies have transformed their, reality. The Dutch East India Company is said to have been the first company to publicly offer its shares in March 1607. But if we talk about Indian company, Reliance was the first Indian company to go public in 1977. Even before the regulator, the SEBI was constituted. So you must have seen the movie Guru. You know how their journey started. There are a lot of technicalities and legalities involved in the IPO process. If we talk about specifically, the journey before a company gets listed. So there are a lot of technicalities involved, but let's not forget it's also a lot about numbers. So as chartered accountant or as aspiring chartered accountants, our role is very pivotal in this entire journey. From auditing financials to certifying disclosures to valuing business or maybe helping the company to regulate with regulatory compliances. The expertise of CA is indispensable in this entire process. So in today's session, Aditya will cover why companies go public, the reasons, some of the reasons I just listed, the practical aspects behind their decision, the journey from DRHP to the final prospectus. A lot of you must have heard the term DRHP, but do you know what it is actually? I mean, how does it take shape? Uh, then the SEBI ICDR regulation. I'm not sure. Many of you might not have. You may have heard about LODR regulation, but there is also something called ICDR, which is issue of capital and disclosure requirement, which is to be taken care of when a company is going for IPO, and once it's listed, they have to follow LODR. So, which ensures investor protection and market transparency. There are a lot of regulations that one has to adhere before they launch their IPO. And finally, the role of key professionals. It's not only CEO and the company, who are involved. There are many, many, many players involved in this entire, process. So, going public is a huge step, not just for the company, but for everyone involved in the process. It's a thrilling journey. Me and some of my colleagues who are here, we have had experience of this journey. It sometimes may seem too much, but very adventurous process. It's a journey of growth, risk, and enormous responsibility and accountability for all parties. And today we are going to explore what exactly this journey looks like. So I encourage all of you to, ask questions, share your insights, and make it interactive session. I now welcome Aditya to, uh, run us through the journey. I'll be there to answer any questions. Yeah, Aditya, over to you. Just don't show your match with the camera.
So we had a little bit of revision. So we had the revision before the session actually started. So we had an overview of what we are going to discuss today. So what is IPO? Some of you raised hands that we are investing in IPO, and I see some of you bringing notebooks here. So first things first, the session about the IPO, before beginning the session, what should we think about? The thing we should be thinking about is that how do we approach this session? Why are we doing this session? Okay. What is the purpose for this session? When I started practicing, when I was involved in the IPO division of wherein I'm pursuing my articleship, so I was the ICDR regulation. That's a 489 page long document. And I was supposed to read that whole document so that I can understand what am I going to do in this, how am I going to converse with the clients, right? And I read that document for like 1 week. I stayed for long hours and I kept reading it. And after 1 week, I went to my reporting manager, sir, I need your guidance. I was like, sir, I read everything, but the thing is that I really don't remember what I read even yesterday. Because the document itself is 489 page long, and my expertise in case of finance is not as much as a CA would be, right? So I'll be talking about this 489 page long document itself, along with that ICDR regulations, some of the things that are happening in the practical life. So to begin with, what is the approach? The approach is simple. You get the conceptual understanding of what IPO is, why do companies bring it, and most importantly, when a company is bringing the IPO, how are the things going on in the back end? What are the parties involved? What are the things that they need to disclose? Why is it so much important for a company? Because we might have seen an IPO as an investment opportunity till now, correct? So let's begin. There are a few things that I would like to just mention here. The PPT that we are seeing right now is just a summarized form of what I'm going to present. So it does not contain everything, it just contains the headings. I have a Word file which is not as visually attractive as this one, but if you want me to switch to the Word file for you to make notes, please request. Right? Okay. So first thing, what is an IPO? And I will require everyone's participation, because the thing is that the as much as as long as this sounds interesting, it is also boring, right? What is an IPO? What do you think? If if anyone from online as well, if you want to give some answers in chat box, please, you are open. Even from this side as well, I might not be able to face you guys. Okay, I just need one answer, because I guess we all are belonging to the CA fraternity, and at least we should be knowing what the full form of IPO is, right? Great. So the thing is that we need to open up. While we are sitting like this, this is the so like we just need to see the what we are going to learn here. So initial public offer. So why is it so important? The first, as ma'am mentioned, there are few reasons why companies want to go public, why companies want to bring capital into the market. So it's a once in a lifetime opportunity for a private company. See, what is a once in a lifetime opportunity for us as human beings? What is a once in a lifetime opportunity? To be specific, in Bharat, there is something which is once in a lifetime. Okay, marriage. So while we are finding the partner of our lives, we have the deepest scrutiny that we can ever achieve, right? So in the same manner, a private company is getting listed. A private company is doing, in while it was private, the funds that were in the company were only from members. Now who will involve? Public, general public, everyone from Bharat, everyone from entire world will involve. So what if there is some fraud? What if the company says that I want some capital for me to build a software, for me to have this land, for me to repay these loans, for me to enhance my business, for me to enter into new endeavors, but at the end it runs away with the money. So these things need to be made sure. So what is so we have an entity which makes this sure. Which is the entity? SEBI. So SEBI has been given the responsibility to look at all this. Ki, There are some companies bringing IPOs, so they follow the guidelines, they follow the regulations because the money of public is involved. Two things we discussed right now: money of public will be involved. So it is very crucial, once in a lifetime opportunity for both the private companies, because it is a very big opportunity for a company to grow from zero to skyrocket. Right, as we heard that there are some IPOs that got oversubscribed by 400%. There are some IPOs which raised only 95 crores in the first initial offering, and then it got to huge levels. Correct. So it's a once in a lifetime opportunity. So it is very important for us to very important for the company as well to properly plan it, because if anything goes wrong, it is going to incur cost to the company, and that image will be staying with itself for a very long time. So to move very quickly, what are the advantages of going to public? Why do companies go public? If I tell you, ABC Private Limited, and if I tell you ABC Limited, the share price of that stock is 50 rupees. These two things, a layman would understand that the fact that these ABC Limited, the share price of which is 50 rupees, which is also listed on BAC, is governed by strict regulations. So it is going to be more careful about my money. It is going to be more careful about its own business. It is going to be more genuine. So first things first, genuinity of the business, right? Then we see stronger financial base, of course. See, you have a limit of, I guess, two members in private limited company, right? And in this public listed company, there's no limit, right? So we have stronger financial base. The authorized capital that we have, that is the base, right? Then we have better financing prospects, stronger position for acquisition and increased market value, ability to attract and retain talent. How does it do that? Even public companies issue ESOPs. Talent is what? Employees, right? Now we want to retain that talent. So what do we need to give them? ESOPs, or rather say benefits. Okay, we just need to give them the benefits, they'll stay with us. What kind of benefits we'll be giving them? Monthly benefits. Okay, so what we'll do is basically when the shares are listed on the stock exchange and employees are holding them, so there is a vesting period. We have learned that in CA intermediate. So there are 3 to 4 years of vesting period, and they earn a lot of money through that. So there, at some places, it is not possible for companies to retain talent and pay them as much as they'll be willing to get, right? So what we give them is ESOPs, and they can enjoy the increase in the capital prices of the shares. Goodwill is there. Goodwill also increases, and the thing about practical part, exit to the investors. In this world, in this country of startups, where startups are booming, what happens is the first round is what? Seed funding, right? So we attract the investors, we get the funding. After getting the funding, the company runs its business, gets the guidance from the investors for 3 to 4 years, right? For about 3 to 4 years, the company matures itself. Now, when the investors feel okay, well, now my money has been at a level where I want it to be. Now I want an exit from the firm, exit from the company, right? So what do they do? They'll tell the private entity. So there are private equity as well. There are venture capitalists as well. So what are these? These are basically investors who invest in private firms. Now what they want is they want their money back. So what they'll do is they'll tell the private company, you do one thing, you come up with an IPO wherein the holdings that we have, we'll be selling those holdings. For example, ABC Private Limited has 100 shares, right? 25 of them are held by investors. Now investors say, now the value of this 25 is enough for me. Now I want an exit. So company, what they'll do is they will issue that 25 shares in the market. They'll bring an IPO. And now the investors will get an exit. The company will be converted into a public listed company, and it can function in its own way. So first thing, conversion of private company to public company. These particular clause, conversion of private company into public company, is conversion of private company to public company. It's not there in ICDR. But why does the company need to go private to public? Any answers? For it to bring an IPO,
is point from general public.
Exactly. By the definition of the private company in section 2 of the Companies Act 2013, a private company is the one which by its memorandum or articles restricts the right to transfer the shares, right? Or even for that matter, the number of members are limited to 200 in private company. Now, if you want finances, will you be able to get the finances for your business from only 200 people? Right? So you need to go public. You need to convert your entity into public company. A public company can be of two types. Which one? Listed and unlisted. Correct. So this is what we discussed. Why? What is an IPO? Why go public? Okay. And it is going to be even difficult for the online participants to concentrate, I understand, but it is your test as well. Let's go further. So now the company is converted into a public company. So what we are going to do is basically we are going to see the process of the IPO from a third person's perspective, so that we can have the overall idea what are the things that we can do in future in capital markets as a CA. So we are at the stage of public company right now. Now the company is converted into a public company. Now the company has decided, okay, bhai, I'll be bringing an IPO. So what are the types of IPO? Just like we have types of marriage, right? Sorry? Main board and SME, correct. So there are two platforms where we can get ourselves, where we can offer our shares, SME and main board. Main board and SME IPOs have been in highlight since in recent time only, right? So in main board IPO, to say in short, there are very strict guidelines, there are very strict regulations, and there are a lot of disclosure requirements. Whereas in SME IPO, it is small, medium enterprises. So the eligibility requirements of the SME IPO for it to offer IPO is lesser. There are some places where SEBI has given exemptions to them. Ki, okay, bhai, these are the things that main board IPOs need to disclose, and these are things that SME IPOs are good to go without, right? Now the company has decided for a main board and SME. While bringing an IPO, they are offering the shares. How can they offer shares? Either they can give new ones or sell the existing ones, right? The company has those shares, they'll issue they'll come up with fresh issue or offer for sale. Fresh issue and offer for sale are the two types of IPO that we are going to see. Now, in the offer for sale as well, there are multiple. Now we are going to have a glance at why these ICDR regulations are so much headache. Okay, so offer for sale, while offer for sale shall be held for a year prior to filing of the DRHP. There are some regulations relating to the fresh issue. There are some regulations relating to the offer for sale. Now the company is going to sell those shares. If they want to sell those shares, what is ICDR saying? ICDR is saying you need to. I would request everyone, if you want to make notes, this is the right time that you can start making notes in just 2 or 3 words, right? So those shares shall be held for a period of 1 year at least before they are getting sold, before they are issued. So that is the first thing. The first thing now, what if there are convertible shares? So basically, we'll continue with the 25 shares example. The 25 shares that we were talking about. What if they were convertible? As in, they were not equity shares at the beginning. ICDR says that the equity shares which are being offered for sale shall be held for a year before the issue. So, for example, if it is issued on 31st of March 2024, the equity share shall be held by the person who is selling those shares as on the date 31st March or 1st April 2023. So that completes the 1 year period. Now, what if those shares are convertible? So at the beginning, For example, say on 2nd April 2023, they are not going to be equity shares, right? They'll be converted into equity shares, say 31st May, correct? So any guesses what will happen in this case? Exemption, yes. So basically, ICDR is itself granted exemption in this. Okay, if the convertible shares are there, then the period of holding shall be considered from the beginning itself. So as on the date when those convertible shares are issued. Any other example like this that can come up to your mind regarding the offer for sales, wherein the equity shares, if you see the shares which are being sold for the 1 year period, and they were equity shares in before that 1 period as well. Bonus issue. Okay, what is bonus issue? Basically, if one shareholder is holding 1 share, the company will say, okay, I'll give you 5 shares now for every share that you are holding. So on 1st of April 2023, an investor had 1 share which he'll be selling in the offer for sale, correct? Now on 31st of May, the company issued bonus every 5 shares, right? Now, what about these 5 shares? Can they sell this in the offer for share?
Yes.
Why?
They want to shares because he was holding the previous shares like on 31st March 23.
Correct. So that's what ICDR mentions. If these bonus shares, in respect of which equity shares these bonus shares are issued. So we had issued 5 bonus shares in respect of which shares? The ones which are held on 1st of March 2023. In respect of these, they are held. So if that bonus issue is again, these we must have heard multiple times, if they are not issued from revaluation of assets or unrealized gains and issued from the securities premium reserve, then it's okay. Then the period of holding will be considered from the beginning. So these shares can be sold basically. So now we just understood the 2 types of issues, fresh issue and offer for share.
So this in offer for sale in today's era when a lot of startups are having all these investors and all, what he just talk about convertible. So usually if you see any startups, balance sheet and all, CCPS are very commonly issued. So CCPS is the most common tool we say to offer shares. And generally, so you can go on BSE's website or NSE's website, and even before listing, you can check DRHP, which is draft red herring prospectus of any company which is going to come up with an IPO. So on its first page itself, you will have details of shareholders who are selling their shares. So OFS as we talk about. So you'll be able to understand whether these are promoters who are selling their equity shares, or these are investors who are taking the exit. So you can get this information on the first page itself on the DRHP. Though DRHP is a 400 500 pager document. I mean, when you work on it, then it becomes easier to go through it. But these are few pockets which as a CA or as an aspiring CA, you can actually check and understand also very well. Yeah.
Right. There's one more thing which I want to just highlight here, that what if the shares are held by the company under the scheme of arrangement, or so to say merger and acquisition. So before the offer for sale came, there was a merger that happened between ABC company and DEF company, and the merged company came to be known as PQR company. Now both these companies got equity shares of PQR company on 31st May. Okay, now PQR company wants to do what? They want to issue an IPO. They want to give offer for sale. But can the shares which were issued to the shareholders of PQR company as on 31st May, because the shares will be in the name of which company? PQR company, right? So in that relation as well, there is a ICDR regulation that in that case as well, if the scheme of arrangement has been approved by the central government, high court or tribunal, the period of holding will be considered from the period of scheme of arrangement, wherein if before such approval the shares were held for more than 1 year before the approval came of central government relating to the merger. So before the merger of PQR happened, if the shares were held for a period of more than 1 year, then it's okay. You can give them, you can offer them for sale. So this is just for offer for sale. There are certain other guidelines for fresh issue. Correct. Now, even if you go deeper in offer for sale, the selling shareholders, they have given even bifurcation there. So if the selling shareholders hold more than 20%, so for example, the company had 100 shares, ABC company had 100 shares, and it wants to, the investors had 21 shares in it. Okay, so the investor owns more than 20% in the company. So ICDR says what? ICDR says you can only sell 50% of your holding if you own more than 20%. So this guy, Aditya, who is holding 21 shares of ABC, which is 21 shares. So he can only sell 10 shares. Correct? If you go further, now what if I am holding less than 20%? What if I'm holding only 19%? There also ICDR is saying you can only then you can only issue 10% of your holding, which is if I'm holding 19, then I can only
No. That is 10% of company's pre-issue holding.
of their pre-issue shareholding.
No.
Owning less than 20% of pre-issue shareholding shall not sell more than 10% of their pre-issue shareholding.
It's company's shareholding. Anyway.
Company's shareholding, basically. So, of the offer, what will be the amount that they can
sell?
Whole amount. Okay, correct. Because there was a misinterpretation by my side.
So basically, if a large shareholder takes exit, that would raise question about company stability and why large shareholders are exiting. That is when when some scam and all happens, all the eyes goes on promoter ne kitna sell kiya. So that's why this regulation is kept, that more than 20% shareholder is not allowed. There is a lock-in period of 1 year, for 1 year, right?
Yes.
For the remaining 50%. So they don't exit from the company immediately because the public funds are then involved later on. So the large shareholders are allowed to only sell 50% of their entire shareholding. There is no such cap on small shareholders. There is a cap, but it's on total, pre-issue shareholding, not on their entire shareholding. So suppose if they have 10% shareholding of the entire shareholding, and I think it is 10% of the entire issue. Say issue is 200. Okay, uska 10% is 20. So there is an anyway lesser than that. So they can sell, because that would not hamper in case if anything happens with the company. So the cap is on the larger shareholder.
So now we saw the
2 minutes. She has a question. He can step by step. That's how the investors take exit. It depends, but still, by that time, in 1 year, company will also, the public will also understand how the company is working, how they're performing. You have quarterly results coming out. So, you know how actually, and then once the company goes public, it has to be much more transparent than it was before listing. Before listing, most of the companies are private. So that time it's not very transparent to regulators, though a thorough check is done during IPO process and all. But still, it's like that 6-7 months of process. But then in next 1 year, how the company is performing and all, and it's not that promoters or the existing shareholders can never leave. They will always have opportunity to transfer their shareholding and all. So you can't keep them accounted like for entire lifetime. How we have the Salomon versus Salomon case. company is separate from its promoters. So, but they have kept, regulations to monitor to protect investors' interest. That's how you can offer for sale. What you already have, only you can offer that only. You can't offer anything beyond that.
Yes. So one small thing I would like to emphasize here again is that I talked about the approach to this session, wherein the approach to this session shall be what is IPO. Now I spoke about 4 things in the offer for sale, which is convertible shares, bonus shares, and the limit of the shares that they can sell. Regarding the merger and acquisition, I also spoke. Now, are you going to remember this after a week? If you can, you are better than me, and there is no harm in that. But the thing is that sooner or later, we are tend to forget these things if we don't revise this, right? So if you want to note this down, that is good. But the thing is that we don't need to panic that these are the details we missed. So we heard this session for like 2 hours and only the things that I understood was like for 2 minutes. That is not the goal here. The goal is to know what IPO is. This session has been conducted for you so that you get interest in this, or you can explore what an IPO is so that you can see these are the things in IPO which excites me as a professional. Okay, so we go forward now. We have seen offer for sale and fresh issue. In that as well, the pricing needs to be determined. Pricing of what? Again, shares. Okay, we are going to issue. So how are we going to assess the price of the shares? So the SEBI says there are 2 ways you can assess the price of the shares, which is book building issue and a fixed price issue. Both these things are very simple, but we have a we have this shock. We have this shock of calling everything by a fancy name. The one more concept will come up again about green shoe option. Green shoe option. Hedge funds, mutual funds. So when private equity, venture capitalists. So these are the terms. When we understand them conceptually, it feels like okay, it was nothing. So in the same question, we don't need to be afraid of these things. Okay, what will be book building issue? When I heard this first, I was like, book building issue is the first time I'm hearing. What can it be? Okay. So there are 2 ways: book building issue and fixed issue. We'll see it further. Now, is it possible for is it good that every company in Bharat gets listed in BSE or NSE? Should there be a door where where the lecturer is SEBI and the student can ask, may I come in, sir? Right? Should there be a door or not? Otherwise, what will happen? Every company will sit in the class, which will not be good for the Bharat and SEBI to manage as well. So, may I come in is what? Eligibility. So, what will be the eligibility for a company to enter into the listed environment? So, ICDR says net tangible assets. Net tangible assets is basically 3 crores in each of the preceding 3 years. We can see the net tangible assets definition. I hope we are all aware about that, wherein tangible assets is basically the fixed assets or the PP, which are tangible, which can be touched and felt, right? So there are 3 conditions that ICDR lists down here. Net worth. Net worth of the company is what? Any idea? Net worth of the company? Exactly. Total assets minus total liabilities. Net assets, net worth, both these things are same. Again, so that should be 1 crore in the preceding 3 years. So why does it need to be in all the preceding 3 years? The regulation says it should be average, at least average 1 crore in the preceding 3 years. So if it is higher or at least equal to 1 crore in all the preceding 3 years, it will be on an average 1 crore in the preceding 3 years, correct? If we go forward, they have also issued a regulation relating to profitability. The minimum 15 crore in aggregate, okay, 15 crore operating profit, average 15 crore operating profit in the last 3 preceding years of the issue. Okay, now I have something interesting here. Okay, let us just complete this. What if the company does not follow any of this or even one regulation of this? Is it not allowed to come inside the room lectured by the SEBI? Because not every entity is going to have 15 crore operating profit Average profit. There are many entities which were on losses, but they got listed. Did it strike us? The thing is that if you are not eligible, this is regulation 6, sub-regulation 1. So these three regulations are there. Now then we have regulation 6, sub-regulation 2, which says if you are not satisfying any of these regulation, then what you should be doing is you can only issue your shares by book building issue. And there are some other requirements relating to the offer of those shares, that those shares shall be offered to qualified institutional buyers to the extent of 75%. So basically, if you are meeting these criteria, there are other ratios to be followed when it comes to offering those shares to the public. So for example, if you are bringing 100 shares, so say basically you give 20 to public, you give 20 to qualified institutional buyers. Who are qualified institutional buyers? Who are basically large buyers, anchor investors, mutual funds. Anchor investors are who? Anchor investors offer for more than 10 crores in a public issue are called anchor investors. Then we have mutual funds. And then we also have non-institutional investors. So these are just fancy names to given to some small, easy concepts. Non-institutional investors are who offer for more than 2 lakhs. Retail individual investors are who offer for less than 2 lakhs. So there are basically SEBI has said that you issue 20% to these guys, 20% to retail investors, for example, 20%, and 20% to retail, 20% to non-institutional, and so percent to qualified institutional buyers. So similarly, if the company is not meeting any of these criteria, then you have to issue book building, and you need to give 75% to qualified institutional buyers. Why does that happen? Because the SEBI says you only 10% you can issue to the public if you are not if you are not satisfying these guidelines. So if the company is above these criteria, then company will market itself very easily. Public will be more interested. If you are not meeting any of these criteria, then public will not be as interested as it would be if they followed these criteria, right? So the public involvement is limited to 10%, and it is said that for the objects of the issue. So basically, I might want to repay my loan by raising the issue. So I'll bring qualified institutional buyers who give guarantee that I'll subscribe your IPO to the extent of 75%.
Covering what is QIB anywhere?
Yes.
They're covering it.
Yeah. If you want to say
No. Otherwise, I'll ask.
that will be it.
Any of you all know what is QIB? He's talking about, but beyond that, I mean, what it is actually. I mean, we very loosely keep talking about institutional buyers, but do we know what it is, or what is retail investor, or what is non-institutional buyer? Any differentiation that, I mean, apart from the allocation part? So qualified institutional buyers are large organizations like say mutual fund or banks who have, I think, at least 100 crore as their financial assets, minimum 100 crore. So these are banks, financial institutions, mutual funds who are allowed to, they are separately registered with SEBI. Not any random company can, be a QIB. So they are separately registered with SEBI, and they invest in large chunk of an IPO. अगर कोई इंडिविजुअल करने जाएगा तो उस पे एक्शन ले लेगा सेबी कि ये क्या इनसाइडर ट्रेडिंग किया है. Okay, so we retail investors can generally bid for less than 20,000, as you must have, if any of you are investing, you must be knowing. So those are retail investors. Non-institutional buyers they can be HNIs and all, who are not QIB, but they can still invest in larger numbers. Rakesh Jhunjhunwala, and all, you must be knowing. So these are not organizations, maybe, but they can still invest in larger numbers. Again, they are recognized by SEBI. So yeah, just that.
Okay. Now we are talking about the classroom wherein it has been lectured by the SEBI. So we saw who can say may I come in, who can ask for the commission, who can ask for the permission. So when we were child, did we have any boys? Because girls are not as mischievous as boys. Did we have any boys who were always say you are not allowed to come in? If they were in the classroom, they were asked to go out of the classroom. Did we have such boys? Did we have such friends? Or we ourselves the ones who were said to go outside of the classroom? So should we have some companies like that? Okay, we should always be out of the class. So you are not supposed to come inside. So there comes the concept of not eligible. We saw here what eligible. Similarly, we'll see what is not eligible. So according to you, if you were SEBI, what will you say? Who should be not eligible? I would say whoever I say no to come shall not come. A company which is not a private company is a public company. As simple as that. Okay. So the SEBI ICDR regulation says what? The ones who have been debarred from entering into capital markets. So they have used some fancy words like debarred. But debarred means you are just basically SEBI saying you don't come inside. You don't come inside. So those are the entities. So they have listed some name of the designation. So for example, directors, promoters, or promoter group. If these people are debarred from entering into capital markets, then they have said if there are if the directors and promoter group of a company are fugitive economic defenders. Fugitive economic defenders seems very fancy, but it's basically the ones who are prosecuted under criminal laws for not repaying their debt. The first name that comes to our mind is Vijay Mallya, right? So people like those are not allowed to bring IPO. So basically, if you want to remember in summary, who are not allowed to bring their IPOs, whoever SEBI says no, disqualified. Okay. Now let us see what IPO is all about. Now you've seen the eligibility, non-eligibility. Okay, we are sure. Okay, we are eligible as well. What will happen now? So there are three stages of IPO: readiness, pre-IPO, and execution of the IPO. Might not be there. Okay. So readiness is basically the companies assess what are the things that it needs to get in line with the ICDR regulations. Okay, during this phase throughout IPO readiness. So basically, when we are going into a picnic, we pack our bistras, suitcases, right? So that thorough assessment is conducted and big picture issues are identified. In short, then we have pre-IPO, wherein after planning, after making our suitcase, we'll prepare a timeline. Okay, like 2 days we'll visit Goa, then we'll visit Bangalore, then we'll go to Kodaikanal, and we'll also visit the centers which I forgot to mention in between. Okay, so that is a timeline. Whether we have started traveling, yeah, have you started traveling? No, this is the timeline. Then execution, we'll start traveling. So the company will enter into due diligence. So company can itself do due diligence. Is a company capable? You see, we SME companies from rural region, there are hell lot of companies which have hell lot of people, right? So they might not have as much professional knowledge and everything relating to these definitions and everything. So what do they need? They need help. So they'll go to SEBI. So if all the companies go to SEBI, so you must have seen if all the people start asking doubts to SEBI, then SEBI will say what? You come one by one, or they'll appoint one monitor. Yeah, इसको doubt पूछो आप सब. Then if the doubt is so brilliant that it cannot even be solved by monitors, then the teacher will come up. Okay, now these are the things. So similarly, just like the lecturer appoints a monitor, we have whom? Merchant bankers. We have multiple names for merchant bankers, BRLMs as it is called in the ICDR regulation, book running lead managers. These are basically Axis, ISEC, ICICI Securities, Unistone. There are multiple merchant bankers in the market. So we must have seen in the previous slide that the key players in the IPO, the maximum role is played by the merchant banker. So first entity we have is company, that is which is issuing the funds. Merchant bankers or investment bankers, book running lead managers, left lead. All of these are same name for one entity. They'll manage the whole IPO process. They are having the largest responsibility in terms of an IPO. Company is disclosure requirements. Can merchant bankers do everything on their own? They are not related to the company. They might not know the internal affairs of the company. So the companies have companies council, legal counsel. So there are legal implications as well. There are some. So if company is going from private to public, it needs to give all the disclosures. So there might be some legal implications in the company involving. So those legal implications are to be addressed by the legal counsel of the company. For example, will give disclosures or clarifications what all the disclosures that are relating to the company to the merchant banker. Merchant banker will review it and it will draft it in the DRHP prospectus, whatever we call it. Then we have merchant bankers council as well, because merchant banker might not be well versed with the they are well versed with the legal implications, but they have their own legal counsel, so that the legal counsel of the company can interact with themselves and legal implications can be better understood by the on the side of merchant bankers. And then comes us, independent chartered accountants. Why do we need independent chartered accountants? Because IPO itself means finance. Finance involves what? Numbers. And who is the one person, what is the profession that also knows litigations, that also knows law, and as well as numbers with it? Legal profession is not well versed with the numbers. They are, but they don't understand tax. We also understand tax. We also understand how to interpret law. So by the fact that we have these capabilities, there are certain certificates, there are certain compliances be certified by which can be relied upon by before that merchant bank. Merchant bankers will rely upon our certificates. Okay, we'll certify that the outstanding creditors of the entity as on 31st March 2024 was 10,000. So CA has signed it. It means that merchant banker can rely upon it. Merchant banker will conduct its own scrutiny as well, but these are the basically main players.
So, generally, you must have seen in any IPO, there are at least 2, 3 bankers. Generally, there are 3 at least. Okay. So, there are agreements with them also. They are called BRLM, book running lead managers. Basically, as Aditya said, their role is to do the marketing and basically take the company through the entire IPO process. They manage the entire process on behalf of the company. However, because they are in a way aligning their name to the IPO, their security is also crucial. So they have their own councils, bankers council. Okay. Basically, they conduct the due diligence. So each word, like even suppose if you write, there is one section where you have promoters information. Okay, that is mandatory section. In DRHP, there are certain mandatory sections. There are some formats, recommended by SEBI. There is risk factor, there is financial information. So there is one section for promoters, directors information. So even a simple statement, like for example, Mr. XYZ, who is a promoter, he has he has been involved a lot in digital initiatives of the company, which has increased over the years. This is such a vague statement and very general statement. I mean, not a not very big claims, but still, the company, I mean, the bankers council will ask for supportings for such statements also. So, each statement in DRHP is verified like that, and Bankers Council, while they do due diligence, they ensure they have backup for each statement that are being used in DRHP. There are certain certificates they ask for. And what Aditya mentioned about ICA, independent CA. So there are certain, it's not random certificates. There are certain certificates mandatory from ICDR point of view, and there are certain certificates which are required from the statutory auditors. So statutory auditors can also work as ICA, or it can be some other external independent CA as well. And these are not 1, 2 certificates. If you combine both the certificates from both the CAs, it would add to say around at least 40, 50 certificates. So many certificates are required for IPO. And these are not just आपने दे दिया उन्होंने साइन कर दिया, they also ask for relevant backups, and they also do proper scrutiny and verification of the same. After that, certificate is in the value of signature of CA, so ऐसे ही certificate नहीं देते. So that's where IC and statutory auditors comes in. now the company have their own councils. So companies' councils usually draft the entire DRHP. A company is not all not sharing very casually how the process goes. It's a 400 500 pager document. वो एक साथ scratch से ऐसा चालू नहीं हो जाता. There are various chapters. There is one risk factor chapter, one financial information. There is key performance indicator. There's one board related. There's non-business section. There's one business section where you talk about business and all. So these chapters are drafted individually initially, and then later on as you progress the book is stitched together. So this entire thing is done by companies council usually. So basically they help the support company in drafting the entire DRHP, provide their support and their insights wherever company require, because it will be a once in a lifetime event for a company. So they're not expected to know the technicals, and there are some set formats in which a particular DRHP should be. It cannot be any random कि आज हम लोग को ये ऐसा ये कलरफुल ऐसा थोड़ा डिजाइन का बनाना है. It cannot be that way. It has to be a standard document. Why did we have NDS? So that globally all the standards and all are on. I mean, it's easier and standard interpretation for all. Similar way DRHP. So there's a standard format that is being used by companies.
So basically, every detail of that company, which was earlier private or unlisted public company, is to be given in the DRHP. The ICDR regulation is about 450 pages long, and every DRHP of every company is about 500 pages long. So even if I ask you to write about 100 page on a company, can you write it? We cannot write it. Even though we have the financials, if we can write a book on a company, but the prospectus are so large, so there are so many disclosure requirements, which is not coverable within 2 hours. Okay. So the thing is that let us move forward. So we have seen the eligibility, non-eligibility, and the key players in this. Now the company has contacted all of them: merchant bankers, legal counsel, independent chartered accountants. All of them are involved. Now the IPO planning is going, execution has started. So what are the general conditions that the first company should be looking to? First things first is basically you need to seek in principle approval from the stock exchange where you want your securities to get listed. It can be NSE, BSE, both, right? In principle approval means what? Basically, you ask the BSE to give an approval that we want our shares to be listed there, and the company will give BSE will give approval relating to that. So there are certain formats relating to that as well. Okay, what are the how do we make an application there? What are requirements there? What are the disclosures that needs to be made there? But once we have in principle approval, we are supposed to do something with it, which we'll see further. So first thing, in principle approval, if the company has any share in physical format, which is not very, what do I say, which is not very commonly seen in today's time, it needs to be converted into DMAT. Securities held by promoters also, they need to be converted into DMAT because promoters might be holding those shares since very long period, right? Existing partly paid up shares shall be converted into fully paid up. These are some general conditions that I'm just going through, okay, so that you understand. Firm arrangement for this is very important. Firm arrangement for finance for the objects of the issue. So basically, if I want to issue 100 rupees, okay, so the company is saying what? Firm arrangement shall be made towards the 75% of the offer size, but without firm arrangement of finance for the objects of the issue, excluding proceeds from IPO and internal accruals. So basically, 100 would be very low. So let us go with 500. Okay, if the company wants to raise 500 crore rupees to purchase this bottle, okay, so the value of this bottle is 500 crore rupees. So what it says, ki I'll get a loan of 200 crores from a commercial bank. Now I only need 300 crores for this particular issue. These 300 crore I'll get from, so I have some internal accrual. So basically I'm supposed to receive some money. So I have some accrual. So 100 crores I'll receive from that. Now I just need 200 crore rupees to purchase this bottle. What do I do? Though I have one object to purchase this bottle, so I'll come up with an IPO. So these 200 crore rupees, the 75% of that 200 crore rupees, firm arrangement shall be made by the company before the issue, and disclosure will be made regarding these as well. A planned report of the arrangement, that these are the documents, these are the sanction letters. If it has received a loan, if it has received a loan relating to the 75%, which is 150 crores. So 150 crores, the company should be having firm arrangement for that 150 crores. Correct? Then we go further. These were some general consideration. Now we come to the promoter's contribution.
Basically, you can't have more than 25% being used for general corporate purpose. You need to have specific object. SAE IPO nahi aa sakta. You need to have very specific object, whether you need it for capex or for repaying debt, whatever it is, it needs to be properly defined. And there is one objects section in that, and you need to provide supportings for that. So, for example, if you are going to use it for capex, then you need to get quotes from respective whatever. Suppose you are going to purchase a machinery, so you need to have quotes. You must have asked from various vendors for that machinery. So that is one proof that you have inquired for it and you are, actually going to invest in it. You can't randomly just come up with an IPO. You need to have very specific objects.
Yeah. So the bottle was just an example.
Hmm.
So there is a whole list of objects. So for example, it can be for property, land, repayment of loan, software building, intangible asset, intellectual property. It's a very long list.
And again, this you can check in DRHP. It is a mandatory requirement to disclose that before, listing.
So now the SEBI ICDR, we are moving towards the promoter contribution, wherein basically ICDR is saying what? In the offer size, for example, offer size is about 500 crores. So we are going to have 500 crores issued in the market. So promoter needs to bring some contribution. There is a limit towards that as well. So ICDR is just saying that the promoters need to bring 20%. So for example, if the company is bringing 1 lakh shares, 20% contribution towards 20,000 shares shall be brought by the promoters. Correct? Now, what if the promoters cannot meet these guidelines? Promoters cannot meet these particular criteria. So, if they can only bring contribution towards 10,000 shares. So, the ICDR regulation has listed some of the entities. It's like 7 to 8 entities, but these 7 to 8 entities can also meet this shortfall. So, for example, 10,000 shares is being contributed by promoters, then the rest of the 10,000 shares can be brought in by alternative investment funds, foreign venture capital investors, scheduled commercial banks, public finance institutions. So, there is a list. So, these entities can bring the shortfall which is there. But the price of that shares shall be equal to the value which is offered to the public. So, for example, the public is supposed to subscribe that share for 20 rupees. So the people who are meeting the shortfall, they cannot have those shares for 10 rupees only. They need to give 20 rupees as well, right? There are some securities which are ineligible for promoters' contribution. Bonus. What is the what is the suffix of bonus? Whenever we say bonus, what it comes with? It should not be out of revaluation reserve and realized profit. So whenever I say bonus, please keep it with itself that it shall never be out of revaluation reserve, unrealized gain, or any securities, right? And also securities which are acquired for consideration other than cash. These securities also cannot be these securities cannot be considered as promoters' contributions in an offer which is being made. Then we have lock-in. Very interesting concept here. You might have just felt that we are saying, okay, these are general conditions, these are that. Why are we seeing all this? So let me just tell you, lock-in for promoters. One very sharp and clever use of this concept was made in 2022. I'll just tell you about that. So lock-in of basically promoter contribution if there is any shortfall. Scheduled commercial banks, and alternative investment fund, venture capital, if they bring shortfall, okay, then those shares shall be held after the allotment for 18 months, basically 1.5 years. Within 1.5 years, they cannot sell. Then we have, other than that, if other other than minimum promoter contribution, so it is basically if I had contributed towards 30,000 shares in excess of 20%, which is the minimum promoter contribution. So that 10,000 shares can be sold after 6 months, right? Pre-issue capital raised by persons other than promoters. So persons other than promoters, in those shares shall be locked in for a period of 6 months. Now you will say, okay, if persons other than promoters are not allowed to share the shares within 6 months of the allotment, then why do some people say, okay, I booked profit as soon as the IPO got listed? I sold the shares. So that is basically pre-issue capital. What we are talking about, the pre-issue capital, wherein the shares were already held by those people before the offer was made. In respect of that, so they are not promoters, but they already hold shares because the company was a public company. In respect of that, they cannot sell the shares within 6 months. So now the case I was talking about, why these concepts are important. So Nykaa, I'll be talking about this entity Nykaa. In 2022, in 2021 or 2022, it brought an IPO. It came up with an IPO. Now, in those times, the lock-in used to be 1 year. Now it is 6 months. In those times, it used to be 1 year. Okay. So Nykaa, so what would if I ask you, what would happen if the lock-in period gets over? The shares will be sold immediately. If there is a huge selling of shares, what will happen? It will go down. Nykaa didn't want it. So Nykaa did what? Nykaa issued bonus shares. So what happened was the 1200, for an example, the price of that share was 1200. And that share, they issued like, let me just get my facts correct. Yeah, 5:1. They issued for 5:1. So now that 12, so now if one person is holding one share, then it will be 6 shares now. 1200 will be 200 rupee share. So if you had one share worth 1200, now you have 6 shares worth 1200. So you'll have 6 shares, each worth 200, and total investment remains constant. So by this move, if they sell these bonus shares, investors or promoters, because the lock-in period is over, what will happen? Bonus issues, short-term capital gains tax, higher amount of tax, because the period of 1 year is not over in terms of that bonus issue, right? So promoters will incur higher tax liability because of the short-term capital gains tax. So because of this, in order to prevent the promoters from selling those shares after the lock-in period, Nykaa issued bonus shares so that they don't sell those shares. Even after that, the shares got hit by 10% downside, but the impact was a little bit controlled. So this was about lock-in. Then we talk about basically the main thing, disclosures in the DRHP. We have seen promoters' contribution, eligibilities, and everything. What are the things that we will be listing in the DRHP? Very important thing is the object of the issue. If you just see the index, I was trying to get the index on this, but we cannot have it right now. Okay, if you see the index, in the index, there's a list of chapters relating to which this thing is to be given, disclosures are to be given. So I'll talk about some of the few important ones wherein.
While he is talking, I'll just open one DRHP for you to check index.
Yeah. So the objects of the issue. So just like I talked earlier, in objects of the issue, the company will say these are my objects because of for which I'm bringing this IPO. Then we have business section wherein these are business. Then we have forward-looking statements wherein wherein the company will specify these are our prospects in the business, this is how our business is going to function, these are our key performance indicators wherein our net profit ratio is very good, or the ratios relating to the financial statements which are performing above average, or which will indicate to the shareholders that the company will function greatly in terms of the earnings of the profit. These things are related our business. Then you have disclosures relating to the promoters as well. Okay, these are the promoters before the issue of the shares. These were the shareholding pattern of those shareholders. Then you have finance related finance related disclosures.
So this is the first page. This is what I was talking about, selling shareholder details. You'll have details how much shares they are selling, whether they are corporate promoters, individual promoters. Okay. These are all BRLM bankers, as we talked about. And this is the index.
So if you see here, let us just have a quick glance, very introduction. Then in the introduction part, the summary of the whole DRHP will be given in very short compared to the suffix of this document, wherein capital structure of this capital structure of the entity before the IPO pre-issue is given. Then you have objects. In objects, the ICDR has specified a list of these things, objects for which it can issue capitals. Section 2, risk factors. It is very important. In the risk factors, the company themselves are asked to identify what are the risks that shareholders will attract towards themselves if they invest in this IPO. So basically, you are asked to say what bad things will happen if I have a friendship with you. That is what you are supposed to say in your own ad. Okay, I need money, but if you give me money, these are the risks that you are going to incur. Correct?
And even smallest event that must have happened in the company, they have to, disclose that as well as risk factor. For example, recently we did an assignment in that the existing CS. So before the listing, the company was a private company, so it had a normal CS just as an employee, not a statutorily required CS. He resigned and they appointed a proper compliance officer. So even that, it was a normal, fire and hire, not fire, but resignation and hire situation. But even that was required to be disclosed as a risk factor. So these are a lot of paras with different events and all. So yeah, risk factor is very important, and SEBI usually, uh, observes it properly, and a lot of queries or observations received on these sections.
So most of the things are self-explanatory, basically about our company. If you say about our company, you will understand by yourself that it is basically the business of the company, what is the management, who are the people involved in the management, shareholding of them, and any such details regarding them. Then promoter group. This is important again, financial information. This is the section wherein we prevail. You see the length of this section. This section is 274 to 424. The 3 year the three preceding 3 financial years financial statements are to be given in the draft read in the prospectus on restated basis. So ICDR is saying what you might have made some mistakes in the preparation of the financial statements. Who are from audit division here? Do we have anyone from audit division? So we must be familiar with the restated financial statements, right? So in the restated financial statements, ICDR will say what? Okay, bhai, you might have made some errors in the financial statements. Now you are going public. It is very important and it is very crucial for the public to know about the mistakes that you might have made. So the company has given basically 5 criteria wherein it is accounting policy. I just have a list of that. Okay, we can see that in the ICDR regulations. So there are 4 to 5 criteria relating to which you can have guidance, okay, how these financial statement needs to be restated. Okay, and again, a private company in initial stages we discussed, private company will get converted into public company. So did anyone say anything? Okay, so company might have prepared their financial statements in accounting standard or non-GAAP standard, not Ind AS basically. But all the listed entities are supposed to make their financials in Ind AS. So in this restated financial information, financial statement of the 3 preceding years, it will be again prepared in Ind AS, right? Okay. So that is very crucial. This thing itself takes a lot of time because you are supposed to review the whole, and in this restatement as well, there are some disagreement with the auditors, there are some agreement with the auditor, right? So we go forward with that. Then we have legal and other information wherein if the company is involved in, if the company has any litigations against it, it has been issue, where the company is plaintiff or the defendant in terms of tax litigation, criminal litigation, civil litigations, all litigations in against or by the promoters, directors, everyone, everything is to be given in the litigation part.
It is not just litigation in the court. We generally as CAs take income tax scrutiny as regular hai. Even those things are disclosed here. That
So-
against promoters, against directors, there is say 10 lakh का कुछ matter है, whatever. Everything is disclosed over here.
So you can highlight basically if there is an if you of 10,000 being shown there, it is a little tax the deadline for filing the DRHP was 31st December. Okay. So on I was asking for the tax e-filing screenshots where I can details of the tax pertaining. So basically from September, one from December. In September there was some demand and in December there was no demand. So were being shown there. So when they sent me the payment challan said the payment was made as on 28th December itself. I asked for the screenshot on 28th December and the payment was made on 28th December itself. So those things are very important, wherein the company is very crucial about it to say in short. Then your offer information, that is very important again. It's just about 30 pages. They'll give a summary of what is the offer, the structure of the offer. So what is being offered to the QIBs, NIIs and RRIs, right? So those are given there. And other things are just government approvals. So basically, if there are mining regs, the company might have some approvals relating to the mining of any query or relating to that. So the company needs approval for some operations. So those things are mentioned there. So this was just an overview of what things are we supposed to.
Again, basis for offer price is an important section. So here you will have, all those ratios, ROI, EPS, P, and all those, based on which pricing of a share during listing is decided. So this is again very important, and generally you have peer comparison, like industry comparison and all in this section. So all these industry peer company P ratio and all.
Now, I just spoke about the deadline of 31st December. How did that deadline came? So the information which we are presenting over here in the DRHP shall not be older than 6 months. 6 months from what? The last audited financial statements. Okay. So the company had got their statements audited as on 30th June 2024. So the 6 months period is again 31st December. So if the filing is delayed even by 1 day on 1st January, then the company needs to get financials for the quarter 30th September audited. There's one more interesting case there as well, but we are running short of time. So we'll just move forward quickly with this. So after making the whole DRHP, all the and in that 6 month period also, basically you cannot say that the information provided in the DRHP is as old as 6 months. There might be some material developments within that 6 months as well. So relating to those material developments as well, disclosure are given in the prospectus. So if there are any material developments, for example, promoter might be selling some shares, or there might be some internal transfer of the shares. So those are to be given in that, those disclosure are to be given there. So DRHP is made. Now we file it with the board. Which board? SEBI. Okay, Securities Exchange Board of India. So we file it with the board. Now that board will do what? That board will give us. So if we give our homework or if we give our classwork to the lecturer, what does it do? Checks it and gives us. Very good. Okay, so it gives us comments basically. Okay, these are the things that you need to improve. These are the things that you need to give clarification information. And so if basically if I had given an accounts paper to economics teacher for checking, so if there might be some doubts to economics teacher, so he'll go to whom? Economics teacher will go to. Will he come to me? Okay, what have you written in this accounts paper?
You go to the accounts teacher, right? So similarly, there might be some disclosure, there might be some clarification that SEBI might be needing from sectoral regulators. For example, insurance, IRDAI, Insurance Regulatory Board, right? Not board, but whatever is the full form of that. IRDAI is there, RBI is there, right? So those sectoral regulators, SEBI might be needing some clarification from them. So after filing that with board, the SEBI will be giving their comments. In ICDR, it is said within 30 days, but within 30 days of some again, within 30 days of what? So there are some dates as well there. So it basically takes about 3 to 4 weeks. 3 to 4 weeks for the SEBI to send those comments. Once while we have filed that with the board, we'll also file that DRHP on the website, on the stock exchange, on the website of the company, of the board, of the stock exchange, and of the key players. Who is the most important key player? Merchant banker. On the website of the merchant banker, we will also disclose there. And for what? For the public to give their comments as well. So for 21, it will stay there for 21 days. After expiry of 21 days, on the website of all the entities which I mentioned, the company will, if there are any consequential changes in the DRHP relating to the public comment, it will again file it with the board for its consideration. Now the 30 days criteria will again start for the board to send their comments. So once the board sends its comments, just a minute. Once the board sends its comments, once this 30-day period is over, we'll just call it 30 days. It is usually 3 to 4 weeks, but basically when all the comments have been answered, you file the DRHP, then you file UDRHP 1, updated DRHP, then you have UDRHP 2, which you'll see if you read the ICDR regulations, if my session excites you afterwards. So in that you will see UDRHP2 wherein the comments of the public is incorporated. So after that 30 days, the company will.
So basically, not all the company files UDRHP. So I'll tell you one example where I was involved in one assignment. So the company filed DRHP in September based on March financials, previous March financials. They filed it in mid-September. So it was almost 6 months were going to completed. Okay. So by the time they receive comments from SEBI, it will be old financials, and usually you are required to give, up-to-date information. So in the meanwhile, when between like this process, when SEBI gives its comments and then the company responds to it, that's a one-to-month process. So in the meantime, the company also prepares UDRHP so that it can file updated information. So in this particular assignment where I was involved, they got September accounts audited, and then say within 2 months, they filed UDRHP. So after that, UDRHP generally, okay, even comments from SEBI, it's not just एक letter आ गया हो गया comment. There could be multiple letters coming from SEBI. So, the response, sometimes they ask for additional information also. So all that may take time. So meanwhile, a lot of companies prepare UDRHP. Basically, it's the DRHP only, hiring prospectus. It's UDRHP is updated DRHP. And in that, whatever information they've already given, the new numbers are added as an addition column. If there are any material developments, any new event in the company, all that is disclosed. Sometimes some additional things that SEBI must have asked the company, those are also added as part of UDRHP. Few sections which might not have disclosed, and then SEBI asks, you have not disclosed this, please disclose those. So those are disclosed with additional information. And usually UDRHP takes only say 2-3 days for the SEBI's approval. And then it becomes easier for company to file RHP because in UDRHP they've already updated a lot of information. So UDRHP is basically an intermediary stage, it's optional, not mandatory for all the companies, but usually most of the companies do it.
Now So just like the example of paper, the question paper that I gave. Okay. So in that question, in that answer paper also, some of the students fail. In regular scenario, some of the students fail. So we must have heard our teachers to saying this to some students कि तेरी mistake तो इतनी घटिया है कि I cannot even accept clarification for this. Humbug kutta खा के. There is no way that is possible, right? So SEBI has listed those incidences. So basically, when I say, okay, if my comments are relating to these particular issues, then you need to file you need to file a whole fresh DRHP with me. Okay, because the blunders that you have made in the RHP or the prospectus are so crucial that a simple clarification or calling out of information won't work for me, right? So that is mentioned in the schedule 16 of ICDR regulations. We can then have a look at that as well. After completion of that 30-day period guideline, 30-day period timeline, company will file RHP, red herring prospectus, wherein there might be some information which might not be there in the DRHP, but it will be given in the RHP, specifically the price band, where everyone is interested. It is also up to the company if it wants to disclose the price band in RHP or not.
No, it's not disclosed in RHP. It's decided after that. In meanwhile, a price band ad is submitted to SEBI. In RHP, price band is not included. Then when the prospectus comes, so RHP, up till RHP stage, all the documents are submitted to SEBI for their comments and all. When the RHP is ready, RHP is even given to ROC for that comments. Before that, it is not given. So only those will, you must have seen some blobs in the document that I showed. There are some fields that were empty in the initial stage, the DRHP that we saw. So it remains like that till the stage of RHP. And then in the final prospectus or the offer document, all the pricing information and all flows in. Because ROC also does their due diligence on their own. So yeah.
So the main question
It
comes.
says excluding pricing details.
Right. So the price is not disclosed in the RHP, but offer size is to be disclosed not in value terms. It can either be given in the terms of the shares. Okay, we are going to issue 1 lakh shares. We don't know the price of it yet, but we'll offer 1 lakh shares. We are planning to come up with, we are planning to offer shares worth 10 lakh. How many shares we'll issue, we don't know because the pricing itself is not determined. So the offer size is to be given either by the two ways, or we can say 1 lakh shares or shares worth 10 lakh. These are the two things that we can give there. After the IPO begins, minimum subscription requirement is 90%. The issue shall be subscribed to the extent of 90% for it to go forward. Otherwise, what will happen? The company will have to refund the money, subscription money that it has received from the public. Then we have some minimum offer, the breakup of that I talked about, 20% to NIIs and 20% to RRIs. So basically, retail investors will get, shall be given this many shares, shall be given this. So we have securities contract regulation, securities contract, right?
Sorry.
SCR.
Yeah.
So securities contract regulation, something like that is there. In that it is mentioned, see, this is the breakup of the offer to the public. So there are some 25% and it's in very great detail. So I don't think we should be having it done here.
We can run fast now. We are 15 minutes.
Yeah. Okay. Then we have, so they have also given separate breakups for if it's book building issue, which we'll talk later. We'll just cover it. And then if it's other than book building, then this is the breakup of the offer. Public to this, NII this much, qualified institutional buyers this much. You must be remembering that 75% criteria which I earlier talked about. So if it's a compulsory book building wherein the eligibility criteria are not met, then 75% shall be issued to qualified institutional buyers. Now, there is also a clause for reservation as well, wherein company can reserve the shares for few people, basically employees and shareholders. Which shareholders? Shareholders of the listed subsidiaries or listed promoter companies. So if they want to reserve some shares, just like I'm running a company, and if I want my relatives to have a employment there, so I'll reserve some place for them, even though there might be some better candidates. Similar way, company can make some reserves for the shares to be issued to either the shareholders or the shareholders of the listed and the employees. Okay.
So, if I can share a latest example, I think if I'm not wrong, when Bajaj Housing Finance recently the IPO came, they had it reserved for the existing shareholders for Bajaj Finance because a lot of people already wanted to apply. So I think the existing shareholders of Bajaj Finance had preference. So you could separately apply through their website for that.
Okay. So now the IPO is registered. We have made all the disclosures. There are some post-issue post-issue disclosure requirements as well. So if you had seen the key players in the IPO, one of them is monitoring agencies. In monitoring agencies, what are they supposed to do? If the offer is basically more than 100 crores, excluding offer for sale. So basically, if the offer was for 500 crores, and in that 500 crores, it was mix of the two. Basically, they are also issuing fresh issue. They are also issuing offer. They are also selling the existing shares. So if the fresh issue itself, excluding offer for sale, is more than 100 crores, fresh issue is as equal as 100 crores or more, then there is a monitoring agency that needs to be appointed. These monitoring agency will issue a report quarterly regarding the utilization of the funds received during the IPO. So, for example, if the company got 100 crores in an IPO, then this monitoring agency will do what? Monitoring agency will issue a report till what time? Till the 100% utilization of these shares are been done. Now, in all of these, there are advertisement requirements as well, which is the next key player in the IPO process, which are advertisement agencies or printing agencies, right? Have you ever seen an ad of IPO? Advertisement can be anything. It's not something to be seen in this television. It can be on newspaper. It can be on billboards. Have you seen on the very long? The whole front cover page is given so like there was this IGI dam, the whole front cover page was given this advertisement of the issue. So my point is basically that why don't, if these companies have so much of funds and creativity with themselves that they are bringing in public offer, why don't we see a creative ad campaign running from them? Why don't we see any celebrities, just like we see in any product of theirs? Why don't they promote that public offer, which is very crucial than their product itself? Why don't you see slogans like "Alu dalo, sona le jao" or something like that? Or this shares is guaranteed to be oversubscribed by 50 times or so on and so forth. Why don't you see Anil Kapoor giving a surprise like that? Exactly. So basically, public should not be at risk. That's what SEBI wants to make sure. So there are regulations relating to advertisement as well. These are the things that you cannot do. One of them is slogan shall not be incorporated. There might not be celebrity. There shall not be celebrities, etc. Right. So there we have the advertisement. Then we talk about the final thing.
Right, like he rightly talked about, there cannot be any vague claims. What I just shared about social media initiatives that promoter had written, we have, digitized our company and all. There has to be supporting for each statement. That is very crucial in DRHP. In the 500-pager document, there cannot be even one statement, a vague statement that we are the they do not allow adjectives like we are largest so and so, we are the biggest so and so. People use it so vaguely, even if they have not been actually officially recognized somewhere like that. Such statements are not allowed, and it has to be supported by valid supportings. And about the advertising agencies and printing agencies, just a fact to share, you can't randomly, get it printed from any local Xerox wala shop. registered, even printing partners. You cannot, there are some, so I know somebody, a person who does confidential printing. What is confidential printing? Something like a prospectus or checks, because these are documents you cannot loosely have you have at a Xerox wala shop. कुछ गलत print हो गया या proper printing हुआ तो ऐसा as rough papers डाल दिया. You cannot have all these documents plainly like lying like that. So there are very specific printers who can only do these kind of works.
Right. So that was it about advertisement. Then in the initial stages, we talked about book building issue. So we know how fixed price issue is to be made. The price of the shares is basically fixed. Okay, we'll offer it at 100 rupees. Now, what is your name, sir?
Sunny.
Just like Sunny mentioned earlier, price band is to be mentioned. So what is price band? Price band is basically the range within which the price of the shares can be after during the offer, during the bidding process, right? So there are criteria linked to this floor. So there is this floor price and cap price, or floor price, cap price. Okay. So floor price basically the least value wherein the shares can be listed on the stock exchange, and there is the floor price highest value. And there are okay, again otherwise, but so there are regulations relating to that as well. You cannot keep 100 to 200 will be the price, or you cannot say 100 to 103 will be the price. So they have just said कि भाई 120% of the floor price shall be cap price. So floor price, if it's 100 rupees, then it should be 120, and the gap should not be lesser than 5%. So basically, if the floor price is 100, then the cap price needs to be more than 105. Correct? So that will be the range within which offers or biddings will be made. So earlier I talked about the anchor investors who offer for more than 10 crore rupees in an IPO, who are part of qualified institutional buyers. We have breakup for them as well. Out of 75% qualified institutional buyers, or in other cases, other ratios, 60% of the qualified up to 60% of the qualified institutional buyers can be anchor investors who will be offering for more than 10 crore rupees. Now, the bidding for these anchor investors will start one day before the opening of the issue, and the issue will be open for about 3 to 10 days. It should be open for at least 3 days, or the most 10 days. Correct? Now, these anchor investors, so we are basically talking how the pricing will be determined. Okay, if it was 100 to 120, how did it got determined by 150? Who decides it? So if you see the basis for issue or basis for price, in that this rationale for 100 and 120 is also given. Okay, how did we come at the conclusion of 100 to 120? So that's the name of this concept, book building issue. That's why we call it book building issue. So for an example, if a company wants to, I have a table here, but I'll just make it a little bit easy for you to understand by words of voice. I mean, by way of voice. If a company wants to offer size is basically 1,000. Okay, we want to get 1,000 shares. So many people will give their bids 100 to 120. So for example, if one gives for 100, there are some people giving for 120, some people giving it for 115, say. So these bids will be ordered in descending manner. So for example, we have got one person saying for 120 shares, we have got two people calling it for 118, and that will be accumulated. So basically at the first place it will be 100. First price is 120, the highest one. We have one person bidding for 120, two people bidding for 115, which is 230 rupees. What is the total of the two? 230 plus 120 is 350 rupees. In the same manner, these will continue. This cumulative sequence will continue up until it makes 1,000. So by the time it reaches 100 rupees, the criteria of 1,000 will be accomplished before that only. So if you see, so some people gave offer for 150, some people gave for 112. So before it reaches 100, the 1000 will be covered. Okay, so the least price wherein the 1000 total offer size is accomplished, that is called the cutoff price, which will be the issuing price. Now I said about the anchor investors. So bidding will be 1 day prior to them, 1 day prior for them. So what is the risk for anchor investors? So for example, if the cutoff price is 112, let's say, if anchor investors bid for 118, then they are supposed to pay, what do you think? 118. But if they made offer for about 109 rupees, then they are supposed to pay 112. So 112 is the basic limit. But when it comes to these people, I mean us people, retail individual investors, if they have bid for 120, they'll get shares for 112 itself, right? And then if we might have heard people talking about lots that I offered for, I made offer for these many lots, 1 lot, 2 lot, 3 lot, 4 lots, 5 lots. So how do the company determine these lots? So basically ICTR says what the value of each lot should be, yes, 10 to 15,000. The maximum price should be 15,000 of a lot, right? So company will make a list. Okay, how many shares do we want to keep in one lot? So for example, if I keep 12 shares in one lot, the if they at one supply for 12 shares, so they'll have to give money up to 1,000, equal to 1,000 rupees. So value of 12 shares is 1,000 rupees. 13 shares is, for example, let us not get into the arithmetical accuracy of my assumptions. So 13 shares it is 13,500. For 14 shares, if they want to give a lot of if they want to make an offer for 14 shares at a lot, the value of that is 14,500. So by these calculations, they'll determine, okay, by within 10 to 15,000, we'll keep one lot of 15 shares wherein investors can bid for 15 shares at once or multiples thereof. Then you see people saying that, oh, I didn't get this IPO. Oh, I got this IPO. I got listed. I mean, I got Bajaj Finserv out of 5 family members of my 4 got issues of Bajaj Finserv. So there is a process of allocation as well, which is very easy and interesting to learn, but lengthy. Okay, so you can refer that. It is very beautifully given there. It is given in a tabular format, so it will be very interesting. So I'll just request everyone to see that once. That will be in ICDR schedules are given at the end. In that allocation schedule is given. So they have given a table there. So it basically depends upon how many times has the IPO been oversubscribed. So it's basically 40 times it got oversubscribed. So if it was like the offer was to the public, it was 40 crores. Then if the public was to get 40 crores and people have applied for 80 crores, and the number of shareholders also play a role there. So for example, 1 lakh 1 lakh investors offered for 80 crores, like that. So there is a formula that they have done.
Quickly run.
Yeah.
It's already 6.
And the last point of our discussion, we are familiar with the concept of underwriting, right? So if the issue does not get its desired subscription, then it is this thing. It is assured by the merchant bankers. Basically, it is underwritten. Okay, bhai, I'll give you. Have you ever thought what would happen if opposite is happened? So basically, if there are more shares. So what will happen in the market? The price will go up, staggering by staggering volumes, right? If it was 100, now it's 150. Would company want that? Shareholders will want it, right? As a person of, what is that word? Ordinary prudence. Yes. As a person of ordinary prudence, not give a 50. Company would not want it. Company wants what? Company wants long-term investors. This is maintained and important. They don't want their prices to be volatile. What they do is green shoe option. Green means, if I would have been at the board, I would call it overwriting, right? Opposite. So what they do is basically there is an agency who is called the stabilizing agency. So if there are high amounts of subscription, so what they'll do is they will borrow some shares. So for example, this guy, sorry, your name? Ashwin Bhai. So Ashwin Bhai, I'll tell Ashwin Bhai, okay, bhai, sir, you give me 15 shares. Just give me 15 shares. I'll return it to you. Right? So now that the IPO is oversubscribed, the value of it will be higher. For example, if it was 100 rupees, now the IPO price is 105. So what I'll do is I'll sell those shares. The ones which I have borrowed, I'll sell those shares in the open market. Okay. So now there is selling pressure. So the IPO price will be reduced. Right. So I'll sell those shares. Now, when after a particular period of time, when the stabilizing agent feels, okay, now it is time that the prices have stabilized, I'll buy it back and give it to Ashwin Bhai back, right? So I purchased it for like 105 rupees. Now the prices have gone down. What is your name, sir? Aditya. Very good name. I really like your name. So I purchased from him back. कि भाई अभी I want to purchase the shares. Give it to me for 95 rupees. So I took from him 95 rupees. I again gave it back to him. I got 10 rupees for free. The prices also got stabilized. Okay. One important thing, we are running over 2 minutes, but what if this guy was a person who was holding the shares even before the issue? There is a lock-in period for them, right? 6 month lock-in period, so they cannot. He doesn't know that I'm going to share the shares. Okay, he's just lending me those shares. He's not selling those. So in that respect as well, ICDR says key this lock-in period will not be applicable during the period of lending and buying back. Once the shares are bought back, lock-in will again be applicable. So that particular transaction is exempt and he can hold those shares for 6 months and then again sell it. That is what we have seen so far, and that's pretty much it. I have prepared a list. I'll share the list of the summary, that 450-page long document. If you see some of the schedules and some of the regulations, you will get a pretty good idea about what an IPO is. So we'll share that list as well. If you just see the schedule 6, chapter 2, chapter 9, this much, some 200 pages, 50% discount still, it will be good enough for all of us.
So, any questions or anything else you all want to share?
Who are those people? So basically, they are people. So SEBI has done what? SEBI has broken down. So SEBI has basically categorized those people for us. Okay, so if you are giving offers for up to 2 lakh rupees, then you are a retail individual investor. If you are giving in excess of 2 lakh to 10 lakh, you are non-institutional investor. If you are giving in excess of 10 crores bid, then you are an anchor investor.
So basically, from all these QIVs and all what we discussed, so what he shared about merchant bankers underwriting a particular, IPO, they don't themselves invest in those shares. By underwriting, mean they have these anchor investors they talk to. So in between this period, now there are a lot of investor meetings and all that happens. It's called road shows in general. It's not actually a road show. Basically, it's investor meeting. Okay. These are when they finalize all these anchor investors and all. A lot of them are recommended by bankers and all. In a way, bankers guarantee your minimum subscription to anchor investors. So anchor investors are basically, you can say, a subset of QIBs. These are some of the QIBs who, by literal meaning anchor, they stabilize your IPO के इतना तो minimum हो जाएगा.
And to be very specific, they can be entities as well, like mutual funds. And
हाँ, that's what QIB.
they are not basically the people, they are entities only. Okay, they are not living like us, they have a separate legal identity like that. They are, but the criteria is they should be offering more than 10 crore rupees. And if it's an SME IPO, they should be offering more than 2 crore rupees because SME has lesser criteria.
Yeah. Anything else? Any questions?
And this whole process will, on an average, take about 1 year to complete. So we prepare the whole DRHP. That is the main thing. We will require many
I
things.
think there are some online questions. Okay,
Oh.
initially. Providing exit to the investor is not an object that you generally list. What are the pros and cons of selling the pre-IPO investor shares of exchanges you want to take up? It's a separate topic actually.
There's no pros
Uh,
as such.
Yeah, I mean, it depends company to company. You can't really say, but these days, lot of free IPO selling is happening.
Gray market price. Is that what it's called? GMP?
Yeah.
Was the mic off?
No, initially. Okay. Any other questions? Yeah.
You can ask 2 questions. That's fine.
Actually, I had you said right that anchor investors are the ones who offer like of who offers 10 crore. So if my company is
What my company has what?
higher risk or issuing more amount,
Higher risk in what? Can you be louder?
like if my company is issuing
Equal to or more than 10 crores. So they will say, okay, I want to invest in shares of your company valuing 50 crores, 60 crores. There is a upper limit as well that anchor investors cannot invest more than this amount. So that is given in ICDR.
Sorry, I didn't get the question.
And is it just 10 crores or more? They can also invest, anchor investors.
Generally it's limited. We'll have to see the regulations, but no anchor investor would anyway like to, because anchor investors are also in a way you can say strangers to the company. They're not related to the company, so they also take limited risks. But any monetary limit, I'll just have to check the ICDR regulation.